Welcome everyone to the number one DeFi platform on YouTube. My name is John, and in today's live stream, we have a lot to talk about. So, welcome in everyone. Great start of the week. Not really, but there is a lot of information that we have received these last couple days. And for all of you that are aware, I was sick last week, so that's why you guys weren't able to catch me on last week's stream. I hope you guys all had a good time with Felipa, though. And I'm still a little bit sick, not as bad as I was last week. But I hope all of you are having a wonderful day today, despite the crazy market conditions. So let's go ahead and get started today. Let me go ahead and fix the camera. Let's see. Everything looks good. Make sure to go ahead and comment down below, everyone. I love interacting with every one of you. Make sure to smash that like button. Turn on post notifications if you haven't already. Let's go ahead and start off with crypto bubbles. As we see right now, all throughout the market, a little bit of neutral, a lot more bleeding. We actually saw a lot of bleeding over the weekend, and there's actually a few reasons as to the reason why. And we're going to go ahead and go over that in today's live stream. So go ahead and hang on tight, smash that like button if you are tuning in on YouTube. As I mentioned, make sure to go ahead and comment down below. Now, taking a look at the market overall, as you see, altcoins are taking a massive hit, unfortunately. It's not looking too good all across the board. I think there has been a lot of fear overall in the market, and there has been continued to be a lot more fear. And there's a few reasons why, right? One of them being tariffs, possibility of recession, which we'll go ahead and get into today. As you see, I have a lot of tabs open, which means we have a lot of topics to talk about today. So as I mentioned with crypto bubbles, let's go ahead and take a look quickly on the hourly. As we see in the hourly, slight on the red. On the daily, we do see a little bit of green coming up. And on the weekly, overall, red all across the board. We're seeing over 20% dips. And on the monthly, as you see, some tokens going as low as 41%. Bonk down 41%. Solana overall down 38% in just 1 month. Welcome to the world of crypto, guys. Hype token down 40%. AVAX 30% down. This is just so you guys can go ahead and kind of get an idea of what you got yourself into. Now let's take a look at the yearly. And of course, on the yearly, pretty much everything across the board has been doing pretty good. The only one that has really been suffering is quite a few. The biggest one being right here that I see is Render down at 74%, Gala at 78%, Floki almost down 80% for the year, and same thing with FET Fetch, 80%, and then Solana at 15%. So it's kind of crazy to see this from a longer perspective, and of course, Ethereum down 52%. So has been a very crazy time in the market. And as you see, gold up over 35% in the year. So gold has been doing really well, guys. So let's go ahead and talk about some crazy news right now. One of the biggest ones I want to go ahead and start off with that I found actually quite funny. And I'm sorry to all my XRP maxis out there, but I came across this article and I'm like, I have to go ahead and share it with everyone. Analysts predict XRP price to reach $1,000 if this happens. How's it going? Hazan, is this Crypto Rider 7 or 8? I do not know what you mean, but welcome in. Oh, winter. Oh, you said winter. Is this Crypto Winter 7 or 8? I have no idea about what you mean by that. Or do you mean we're entering a bear market? But check this out with this article. Analysts predict XRP to reach $1,000. And it goes a little bit deeply into, what could go ahead and potentially push XRP to over $1,000 in the near future. And it talks about the Swift global payment processing platform and how if it could go ahead and compete with the kind of volume that it has to go ahead and process. And it says right here that it would have to go ahead and process over 125 million annually to reach 10% of Swift's transactions volume alone. Now, let me go ahead and put this into perspective, guys. Keep in mind that for XRP to reach $1,000, that would have to mean that XRP's market cap would have to be 58 trillion market cap, which, keep in mind, that is a stock market's market cap currently right now. Obviously, despite the fact that we just had this correction, which we'll talk a little bit about that today. But the stock market's market cap overall is about almost 60 trillion. And for XRP to reach 1,000, it would be roughly about 58 something trillion dollars for a market cap. So basically, it's unrealistic, at least for the time being, maybe, 10, 20, 30 years from now. But as of right now, $1,000 XRP is something that we could definitely dream of, because even for $100, I believe XRP alone would have to be over at a 6 trillion plus market cap, which, keep in mind, the crypto market cap currently right now is about roughly altogether around that. So yeah, $1,000 XRP is definitely not going to happen. So sorry to go ahead and break your dreams when it comes to that, but we could definitely go ahead and have a little bit of laughter, especially with this kind of market conditions that we're in, right? Let's go ahead and see what Hassan says. Why doesn't BTC digital gold tracking real gold? That's a great question. That is a great question. We're already in a bear market. I don't think we're fully in a bear market yet. I think signs are showing that we could be entering a bear market. I would say more of a downtrend, not so much a bear market. And I'll go ahead and give you guys a strategy as to what I'm currently doing right now. And the rest, most of the team here at Decentralized Masters, we're mostly right now in stable coins. We're mostly, in stable coin liquidity pools. And right now, stable coin liquidity pools are offering some pretty good rewards with very little risk. So before we talk about stablecoin liquidity pools, we'll go ahead and talk about a little bit about what's going on all around the market. So what we just basically had these last couple of days, Wall Street went ahead and wiped over $4 trillion out of the market cap, out of the stock market. That is one of the largest corrections that we have had in a while. So that is where a lot of the fear is basically coming in. William, welcome in, William. Hi, I write smart contracts if you need help. Thank you, William. Appreciate you. You could always go ahead and reach out to our team. Go ahead and go over to our website or check out our LinkedIn, and you could go ahead and reach out to our team if needed, or more information down below in the description. Another thing right now that's currently going on too, which kind of switched the market a little bit right now. Trump reverses new tariffs threat on Canada after Ontario resigns electricity charges. So as you guys know, tariffs have been one of the biggest shocks in the whole entire market, specifically the stock market, which we'll go ahead and look a little bit more deeply into some technical analysis into what we could be expecting moving forward. I do believe and I do expect the market to continue to go down lower, unfortunately, as much as I do not want to go ahead and say that. But the market looks like we're probably going to be here for a drag for a while. Now, for the crypto market, there's a little bit of hope. And there is a few things I want to go ahead and share. We'll go ahead and talk about that a little bit more deeply throughout the stream. But basically, what has been causing this panic all throughout the markets have been the talks about tariffs. And as you see right now, it's a lot of back and forth. Expect a lot of volatility, as I talked about last Tuesday. And also remember that we do have the FOMC meeting coming up in the next coming weeks. We'll talk about the specific dates. It's in March around, I believe, the 17th to the 18th, or the 18th through the 19th. I'll have to double check. I have it right here. We'll talk a little bit more about that. But FOMC meeting is also around the corner, so expect a lot of volatility coming in. So what I'm doing personally right now is I'm just staying USDC, USDT on the side. I'm just stable coin on the side right now. I am not doing any aggressive purchases as of yet. I'll go a little bit more into what my strategy is currently right now with this kind of market conditions that we're seeing. But just expect a lot of uncertainty right now and a lot of back and forth because of a possible trade war that we're getting into right now, okay? Now, inflation, a looming trade war takes a toll of confidence in the U.S. consumer. So there isn't a lot of confidence overall right now in the markets. We've been seeing a decline in retail spending all across the board right now too. I even went to the grocery store yesterday at Stater Brothers. Keep in mind, I'm in California, and I saw eggs for like $48. I'm like, this is insane. This is insane. It almost feels so unreal with what's going on, and it's honestly showing a lot of signs of a recession, which we'll talk about right now. Apparently, we're not. We'll see, but there's a lot of signs signaling that we could be entering or we are in a recession. Let me know down below what you guys think. And Hassan says, answer BTC is now correlated to real stocks because BTC has been institutionalized. I agree with you 100%. There's actually been a huge correlation between the stock market and crypto with the NASDAQ. So that's how we've been kind of kept in touch with what we could be expecting for the crypto market. And I definitely do agree with you, Hassan. He said repos are higher than 2008. Yes, you're 100%. I'm actually going to pull out an article about that. So there's a lot of signs that are signaling recession. And that's one of the main reasons why a lot of people are scared right now. And keep in mind, cryptocurrencies, Bitcoin, are considered a risk-on asset. So the last thing investors are going to put their money into, unfortunately, would be cryptocurrencies due to the fact that it's a very volatile and it's a risk-on asset. So most people would rather put their money in gold, silver, bonds, and safer alternative investments as opposed to cryptocurrencies that are supposed to be a little bit more speculative. So keep that in mind as well. Hassam says consumers late past 90 days on credit cards an all-time high. Yes, 100%. I'm actually going to be talking about that. It's like you're doing everything for me right now. But yes, there's a lot of uncertainty all across the board. And what Hassan actually just beat me to, late car payments rise to the highest level in over 30 years. So this is insane. It says right here, as you see on this reporter, talking about auto loan rates being at the highest since 2010. Now, keep in mind, auto loans right now are pretty crazy when it comes to the interest rates. Right now, I have been seeing a lot of dealerships offering an incentive of 0% interest rate for if you get a new car, depending on the model and things like that. Even with credit unions right now, even with good credit, I've been seeing people get as high as 12, even like 8%. I would say like 8% interest rates, even on a credit union, for good credit, which is definitely not a good thing, right? So interest rates are through the roof. Back in like 2017, a good interest rate would be anywhere between like 3%. Even under that, you would be able to get that with a 700 plus credit score. Now, even with a pretty good credit score, you'd be expecting as high as at least 6% plus in interest rates. So, yeah, not looking too good, even for the auto market. And the auto market's actually one of the ways that the U.S. really analyzes where the economy is heading. And we've actually been seeing a decline. As you guys seen since the pandemic, we had a lot of cars being priced at double their MSRP and now have come down by a lot since the pandemic. So it's kind of crazy to see this shift in the car market. I've been personally waiting patiently to grab me some deals. There's a lot of good deals right now for the luxury automotive sector. You could go ahead and get some really good cars in that end. But as far as like the Toyotas and the Hondas, those are still pretty pricey and still holding up their value. But we'll see if things come down there. But as far as the luxury sector, there has been definitely a massive decline in the used car market on that end. Of course, some of the luxury vehicles still holding on to their value, but most of them, if not all, have declined by a lot these last couple months. I've seen a decrease of about over 20 to 30%, not even joking, from a few cars that I've seen, not in 1 year, but in 3 to 4 years, I've seen already at least a decrease of about 30% in the used car market. Vernon, how's it going, buddy? Hope you're having a good one, man. Good to see you here today. Like your profile picture, by the way. Vernon, when do you estimate the meme mania will return? I miss the good old days with all those crazy pumps in Solana. Yeah, man, 100%. I was expecting that meme mania to be here, these next coming months, but unfortunately, with the way how the market's looking, it doesn't seem like that's going to be happening anytime soon. And that's actually what I'm going to be talking about today. I'm going to be talking about a little bit about my strategy. Am I still holding on to my meme coins? I get asked this question all the time. Hey, John, have you sold your meme coins? No, I'm down 80 to 90%. I am still holding. It makes 0 cents for me to sell now. And same goes to all of you guys. If you guys are considering selling, I mean, it could be a move for you, but for me, it just doesn't make any sense. I will talk about the strategy that I'm currently doing right now to go ahead and keep myself safe during these market conditions, and how you could also go ahead and still stay in the market without having to risk too much of your money, especially considering the volatility that we currently have at the moment. So we'll talk a little bit about my strategy, meme tokens that I might possibly be buying in the future. Specifically, I think I'm going to be shifting right now. On my meme coins, I'm already super overexposed, so I'm not really planning on adding to those anytime soon. I'm actually looking to go ahead and add on to some altcoins very, very soon. And we'll talk about those and the altcoins that I have in mind and what I'm currently doing in the market to go ahead and still be exposed to the market with very little risk. Hassan, let's see what's going on. But yeah, Vernon, I miss those days, man. I miss those days where you're just able to throw your money into any meme coin and you make thousands of hundreds of dollars, man. I know you were doing really, really good back in November of what was that? Almost 2 years ago, actually. So Vernon, shout out to Vernon, man. But I do think we could be expecting and we could be having that cycle in the next coming months. Maybe not next month, maybe not the month after. I mean, realistically, anything could go ahead and happen, and we could have the market just literally just flip that quick, as we just saw the market correct these last couple of weeks. So we'll talk a little bit more about that and what my predictions are for the market moving forward, and when I think meme coin / altcoin season could be happening. So we'll talk a little bit about that. But Hassan says capitalism is broken. All wealth and assets are concentrated at the top. They are price gouged consumers. I agree with you. Verdon, do you think Bitcoin is hitting $69,000 to $70,000 soon? Possibly. I don't even know what the price of Bitcoin currently is right now, to be completely honest with you. Bad trades turn into long-term investments. 100%, man. 100%. Vernon, it's looking really shaky. Trump, it's absolutely destroying the markets. Yeah. There's a thing right now too that I've been hearing about what Trump could be potentially doing with what's going on currently right now in the markets. I think a lot of us are a little bit more surprised of what is going on and how the market's reacting. But we'll talk a little bit more about that because there is a lot of disappointment right now in the market overall. And to be completely honest, just like a lot of points that Hassan mentioned, there's a lot of points that are not looking too good in our favor as an economy overall, right? So right now there's just a lot of tension going on with the U.S., with Canada, with Mexico, with China. There's just a lot going on. Inflation is through the roof. As I mentioned, it almost seems like we should have all been investing in eggs. I saw this chart a while back. It was about a year ago where it showed the prices of food that was going up, and one of them was orange juice. I wonder what the price of orange juice is today, but eggs literally could have been probably the best investment if you really go back and think about it. I mean, that's insane. I never thought I would have ever seen $48 eggs at Stater Brothers. And I'm in California, guys, as I mentioned. So pretty mind blowing for me. Let me know down below in the comments if you guys are experiencing anything as crazy, or what is the craziest price you guys have seen in eggs or any kind of product at your local grocery stores. But yeah, late car payments are on the rise. That is insane. And also, as well, this is one of the biggest things. Job cuts last month were higher than any February since 2009. So as you guys see, there's a trend going on here. There's a trend that is shaking up the whole entire economy right now, the whole entire world. You see late car payments. You see high prices of inflation. You see job cuts higher than 2009. These are all signs that could be potentially pointing out to a recession. And talking about a recession, Trump actually went ahead and talked recently, a few days ago, or maybe it was yesterday. They asked him, do you think we could be entering a recession? He basically said, I don't know. and the market didn't like that response, right? The market wanted to go ahead and hear, it's not going to happen. He did basically say that we could be expecting a lot worse before things get better, which is definitely not a good thing for the market, right? So it's not what the market wanted to hear, and that's what kind of shook out the market altogether. It's not what the market wanted to hear, especially during a time like this in the market. If you notice, and we'll look into the charts right now, since December was the ultimate top, where the stock market and the crypto market topped as well. As Hassan mentioned earlier, there's a correlation between the stock market and the crypto market, as we've always talked about. But yeah, job cut loss, that is insane, since February of 2009. And as we talked about earlier today, expect a lot of volatility all around in the month of March. March 18th through the 19th is the FOMC meeting. So I do expect a lot of volatility leading onto the event. Now, there could be a possibility of a rate cut. I think a rate cut could be needed right now with this kind of market that we're seeing. And if there is a rate cut, the market could react very positively. But we'll see where things go. But March, mark that in your calendars, March 18th through the 19th is the FOMC meeting. So in the meantime, for me personally, I am not buying any cryptos. I'm just holding on to stable coins right now. I'm actually in a stable coin pool right now, which I'll be talking about, which is on harvest.finance. It is on the Arbitrum chain. There is quite a few different stablecoin pools. As you see right here, USDC 5%. We also have ETH right now on base, earning you 4%, which is actually pretty good. It's probably the best that I've seen. And there's another one right here, CBBTC, earning you 3.23%, which is really nice. There was one that I saw yesterday. This one was earning over 30%, which was virtual. If you go ahead and lend it, you could go ahead and get up to 28%. Aerodrome right now, Aerodrome Finance, if you go ahead and lend that, you could go ahead and earn 10%. Now, keep in mind, if you go ahead and expose yourself to a platform like harvest.finance, if you have Aerodrome and you're already holding on to, why not financial advice, why not just go ahead and lend that Arrow and get an additional 10% out of that? The nice thing about Harvest that I've been liking a lot is that you get actually hourly payouts. Like, you actually get paid on an hourly basis. Depending on the amount that you deposit, I'll go ahead and give you a breakdown of your estimated monthly and your daily. And then you get what is called harvest. So you get your funds deposited, which is in a form of what they use called harvesting, which is probably the reason why they call it harvest.finance. But you get your funds. So you're basically getting paid, which the terminology that harvest.finance uses is called harvest. So you get harvest every couple hours. So you're basically getting your payout every couple hours. Now, keep in mind, these APYs do fluctuate, but if you're already holding on to Arrow, you're already holding on to Bitcoin, you're already holding on to Arbitrum, even Ethereum, why not go ahead and get paid out of it at least just by holding on to it. There's very little risk to it. Not saying there's no risk. Now, keep in mind, none of this is financial advice, but these are the kind of strategies that we're doing out here in Decentralized Masters. Currently, right now, I'm in a USDT pool on Arbitrum on the Harvest.finance platform. So if you go over right here to the top, you can go ahead and choose the blockchains that you want to be exposed to. The top ones right now that I've been personally using a lot is Arbitrum and Base. I got into this Arbitrum specific USDT in Fluid. As you see, currently earning about 8.12%. And so far, it's been pretty much on point. It's been between 7.25 to about 8% these last couple of days. And it has been literally paying out every couple hours, guys. So I would highly, highly recommend check out Harvest. We are not associated or partnered with this platform, but this is one of the platforms that we do go ahead and suggest when it comes to entering into any DeFi strategies. And as you see right here, it says last harvest 58 minutes ago. So about almost an hour ago was the last payout. So they're doing payouts every couple hours, guys. And you get an estimated amount as soon as you deposit your funds. So for all those that are not familiar with DeFi, go ahead and check the link down below in the description. But if you're pretty quick onto getting onto these things on your own, all you need is a Rabby wallet or a MetaMask wallet, deposit some funds, connect a wallet, and that's really it. That's all you do, and it really doesn't require much. Like I said, it doesn't require any managing. It's really just passive, and that's what I'm planning of doing right now. In these next coming weeks, with all this volatility, all I'm going to be doing is I'm going to just be depositing all my stablecoin funds into this pool, and I'm just going to earn the 8%. Now, keep in mind, there is other pools like this one right here, USDCE earning 11%. Now, you may ask, John, why aren't you in this one that's 11%? Well, because at the time when I started my liquidity pool, 11% wasn't a thing. So this was actually just a few days ago that just started. So that's the only reason why, but you could enter whichever one you see right here. There's a lot of good liquidity pools right now, even a lot of other asset classes like ARB/USDC earning you 130%. Now, keep in mind, this is a little bit more volatile because of the fact that this is a pair. But this one looks really good, guys. Look at this one right here, USDC, USDT 11.24%. So I might be exiting my liquidity pool, might consider entering this one. I mean, at 11.24%, so not too bad. And both are stablecoin pools. So right now, that's what I would recommend, in my opinion. Stablecoin pools is the best way to go, in my opinion, not financial advice. But right now, because of the market volatility, I would rather just go ahead and be patient and at least earn a yield on these stablecoin pools. Like I said, there's a lot of pretty good stablecoin pools. I'll show you another platform too as well, which is actually Beefy. Last pool that I saw was earning over 12%. So we'll take a look at that quickly right now too. But you do see a lot of pretty good pools. I mean, this one on Base earning 7.50%, which is not too bad. And if we go ahead and take a look at Beefy.finance, which I found a few pools too that I shared with our private community earlier today. Let's see if they're still available. So they went down slightly, but this one earlier today was earning about 11%. So now, as you see, it has gone down to 8.35%. But this one is on the Avalanche chain. And as you guys see, these are stable coin liquidity pools. So there's really no risk to it. The only risk you really get is if the platform, gets hacked, gets exploited, or your wallet. There's always risk in DeFi, guys. So always be very, very careful. It's not like there's no risk to any of this. There's definitely a risk. The risk could be, getting hacked, things like that. But as far as any kind of volatility that you have to worry about, USDT, USDC have been out for years. So, a problem of them being, what is it called? unpaired is a really, really low chance. But as you see right here, Avalanche is really giving some really good stablecoin pools. If you go over to Arbitrum, let's see what Arbitrum's doing. I mean, you see right now Arbitrum giving a Pepe Wrap ETH 68,000%, which currently right now, as I mentioned, I'm not entering any altcoins right now. I'm just currently right now just in the stablecoin pools. I think the stablecoin pools right now, for the time being, could be the best option. At least that's what it is for me. Like I said, right now I'm just focusing on stacking more USDC to the side. So in the next coming weeks, I could go ahead and start preparing myself to start buying these dips. But as you see, also USDC, USDT Volt 7.13%. For me personally, right now, Harvest has been really great. That is one of the main reasons why I've been sticking to Harvest. But Harvest and Beefy is actually one of the platforms that we go ahead and show you how to use. Beefy is one of the platforms that we initially walk you through when it comes to setting up your first liquidity pool within our private community. But right now, as you see, Arbitrum seems to be the one with the most liquidity, and of course, Barachain, which is a brand new chain. As you see, this one too, USDCE/Honey. Right now, this one's 2%, but this one right here is 12%. I mean, this one right here is probably the best one, BYUSD. I believe these are both stable coins, if I'm not mistaken. But yeah, there's some definitely opportunities in the DeFi market for stablecoin pools. And the returns that I just showed you might not be too impressive, but keep in mind, guys, these are definitely better returns than what your bank is offering. I know my bank, where I have my money stacked, because I have it in both ways, bank and also DeFi. I would rather have it on DeFi, but unfortunately, the world still runs on credit and building relationship with banks, right? And currently, right now, my bank is not offering nowhere near these amounts, and I really wish I had all my money there into DeFi, which right now that's where I'm focusing on. I'm just keeping all my money into the DeFi platforms, mostly into stablecoin liquidity pools, where I could be at least earning a 8%. To me is a pretty good return. Keep in mind, I know we're all into this world of crypto where we expect these big, crazy high returns, but an 8 to 12, even the 13% with no risk is a really good deal, guys. So always keep that in mind as well. Even a CBBTC, which means is Bitcoin, but on the base chain. But anyways, we'll read into some comments right now, and then we'll go ahead and go a little bit more into a few more other things. So let's see. Where do we leave off? Okay, let's see. Hassan says the new dollar printing press is a chicken. Vernon says it's rough holding alts and memes now for sure. Trump just keeps wrecking them over and over again. Yeah, it's definitely not looking too good, man, especially considering the fact that he launched a meme token. That also did not definitely help us at all, sucking up a lot of liquidity out of both the Milani and the Trump tokens. So that definitely didn't help us. Hassan says, if you have a chicken, you can print money. 100%, man. Who would have ever thought that chickens would have been the best way to go ahead and conduct business at the moment right now? We need a recession. I definitely do agree with you. Hassan says, first market crash, then emergency rate cut. That's the plan. I definitely do agree with that, man. I definitely do see that being a thing. It seems like all of this is being done on purpose. And that could be possibly because that would be the best way where the Fed would say, you know what, we are in need of a rate cut. Vernon says, John, will you return streaming on your own channel at some point, maybe when the meme coin season finally hits again, and hopefully it will be even bigger this time around? Yes, definitely, man. I definitely will be back to streaming on my own channel in the future. Currently right now, just been pretty busy with the US. I was gonna say with the US. I've been pretty busy with decentralized masters these last couple months. I've been pretty committed to them. So a lot of work behind the scenes. So that's really what's been keeping me busy these last couple months. But yeah, definitely in the near future, as I get a little bit more time and as the market starts to get a little bit more exciting, you can definitely go ahead and catch me stream on also my personal channel. But for the moment being, you're going to definitely catch me here twice a week, committed, where you'll be able to see me talk about the market news. And like I said, meme coins is not a thing that we're not going to talk about. It's definitely a thing that we're going to talk about, but it's something that we're going to talk about when the time is needed. And right now, I believe the time for meme coins is definitely not the move. Even for altcoins, to be completely honest, I think right now the best option would be stable coin pools. And there is definitely some altcoins that I'm keeping my eye on. But right now we have to be very, very careful the way we play this market, because it's definitely not looking really too good, to be completely honest with all of you. I am Lotus.eth. How's it going? Not available in the US. It is available in the US. Harvest is available in the US. No VPN required, no none of that. You can just go ahead and enter. It's called harvest.finance. Make sure you're entering the correct platform. And you can enter with multiple chains. That could be either Base, that could be Arbitrum, or that could be ETH. The best blockchains that I found right now currently are Arbitrum and Base, that are providing better yields all across the board, alongside with Beefy.finance. But there's a lot of opportunities right now in the DeFi space that are providing a lot of really good yields, considering the market conditions right now, with very low risk. As I mentioned, be on the lookout for March 18th and 19th for the FOMC meeting. And this was one of the biggest news that Trump actually went ahead and announced today. Trump to cut about 50% of education department staff as workers told to stay at home. There's a little bit of mix, half and half. It says right here about 2,100 workers will start receiving termination notices Tuesday. The official said in a press release Tuesday night. The education department confirms the cuts, which come as President Donald Trump is considering an executive order attempting that. So there's a lot of half and half. A lot of people are pushing definitely for this, that the education department is definitely overstaffed. That's what I've been hearing. Some people are for it, others are not. We'll see where things are going to go, but it definitely does show that there is going to be a lot of unemployment going on from government officials. So that is pretty crazy news. One of them being, and I'm sure a lot of you guys came across this. This was actually last week, but I thought I'd share this because I assumed a lot of you might have missed this. But the U.S. firm agrees to buy Panama Canal ports as center of Trump, and I believe this is BlackRock, if I'm not mistaken, that went ahead and so it says right here in the statement from BlackRock CEO, I believe, it says BlackRock is one of the world's largest asset managers, and they're thinking about buying it out, I guess. So pretty big things there as well. This one was a little tricky. I mean, imagine you being this Ethereum well with leverage. It says right here, as you see, Etherwell prevents 340 million liquidations with a series of last-minute deposits. Imagine being this Etherwell and holding on to this much Ethereum to almost being liquidated in minutes, guys. That is the worst feeling ever. You guys could even ask Vernon. There was times where I would literally be seconds away from liquidation, and guess what happened? I actually did get liquidated. There's actually once over a little bit over a year ago where I was trying to figure out how to deposit into this new platform that I was using. How to deposit more into my position before getting liquidated, and I couldn't figure it out. And by the time I figured it out, guess what? I ended up getting liquidated, and as soon as I got liquidated, Solana went up. I was actually leverage trading Solana with like 30 or 40x, and literally hit my liquidation point, got me liquidated, wrecked out of the market, and Solana went up. So imagine the kind of stress this Etherwell was going through to go ahead and prevent this $340 million of liquidations. I mean, that just means you completely lose $340 million. That's insane. I wonder if this was maybe a well Well, of course, it was a whale. What I meant to say is a bot. Like, I wonder if this was a bot, an automated bot that was set up. That must have been the most stressful thing. Imagine having to go through that as you're just like hearing all the news and you're about to get liquidated. Worst feeling ever, guys. Worst feeling ever if you guys have never gone through that. Last but not least, and we'll go ahead and talk about now technical analysis. The House passes bill to repeal IRS broker rule. So basically, what they were saying, the IRS was saying that these DeFi platforms such as Harvest, Uniswap, SushiSwap, they were trying to figure out a way, if there was a way where they could have shared customer information in order for them to go ahead and report that to the IRS. They basically said it's not possible for the time being. So it looks like for the moment they're going to go ahead and just let it slide. I'm sure they'll probably go ahead and try to come back and retouch this. But this was literally just a few hours ago, so I guess a positive for us. So right now they're just going to go ahead and just wait on it and see where things go. But yeah, they really can't. Keep in mind, guys, the biggest thing when it comes to DeFi is they can't stop it. As much as they want to go ahead and stop it, they can't. Now, let's go ahead and take a look at the market overall quickly, looking at the US 100. As we see right now, which is the NASDAQ, we do see a lot of selling pressure. A lot of multiple supports have been lost. We did see a strong support around here last week, which has now been broken. So I do expect probably a little bit more of a correction. Our next support for the US 100, which is the NASDAQ, is at around 18.491, so around $1,800 or $18,000. So that is still leaving us for another 5% down correction for the market before we start to see a little bit more out of a settlement. So we'll see where things go. But so far right now, yeah, stock market's not looking too good. Now let's go ahead and take a look at the DXY, which is actually looking really good and in our favor. So we talked about, last week about how the DXY, the dollar index, was losing strength. And as you guys know, maybe you might not, every time the dollar goes up in value, usually crypto crashes or corrects. And every time the dollar goes down in value, usually crypto goes up. Now, in this case, right now, crypto hasn't been really too correlated to the dollar, but the dollar has definitely been seeing a lot of selling pressure and a lot of supports being broken. So we could go ahead and see a continuation of the dollar weakening. That would be definitely a good sign for the crypto market. And our next possible approach could be the $100 mark. We have already corrected since at these high levels of 106, now at to 103. So definitely some really good signs for us overall. Right now, we do see that the DXY could now be approaching this $100 range, which is definitely a good sign. So we'll see. Fingers crossed. We'll see where things go. Let's hope that the dollar does continue to get rejected. We could be expecting a little bit more buying pressure for the dollar coming up. We could possibly could even see it go as high as 104.67 before we start getting rejected, or we could just go ahead and start seeing what we've been currently seeing, which is just definitely losing support and just continue to see that selling pressure, which is good. We need a weaker dollar, guys. And we talked about this overall. I expressed my cautious about how the dollar was approaching some scary levels from the previous .com bubble. And I'm sure a lot of you can't see this because I can't. But as you guys see right here, during times in the market, when the dollar reached these very crazy high levels, back right here when the dollar reached $162 was in 85, was the Black Monday bank crisis, which was one of the largest stock market corrections that we've had. And then the last one we had was in the early 2000s, which was the .com bubble, when the dollar was at 120. And as you see, the dollar actually reached 115 back in September of 2022. So definitely some very concerning areas, guys. The dollar is definitely has some very concerning areas. Currently right now, from where the dollar is at to the previous dot-com bubble. We are currently about 16% from approaching that. So we'll see if we can see the dollar kind of coming down a little bit more. But the question is, and this is where I've been questioning this for the last couple of years, year and a half, is what crisis are we in? Are we in a tech bubble crisis? Are we in an AI crisis? Comment down below what next crisis, next crash you think we could be attempting. But as you guys see, we are nearing some sort of market crash, which is not looking too good. I think this is the reason why we're seeing that now traditional finance is seeing that pivot into cryptocurrencies and DeFi overall, because they know that there is something very, very big coming that doesn't look too good. And there's really no way of hiding this, guys. As you guys see right here in the dollar from the monthly, look at this on TradingView yourselves. I highly, highly recommend all of you do this yourself as well, so you can stay informed of the markets. But basically, as you see, the dollar reach these very crazy levels before correcting and having a stock market crash. And we're only about less than a 16% move away from that. And at what point we were only about a 13% move away from that. So some very concerning times in the market that we're in. This is why there's a lot of fear and uncertainty right now in the market overall. But let's go ahead and read this question with Vernon. Vernon, it's truly a joy that you will keep on streaming on so frequently, regardless of the market conditions. The insights you share are both very valuable and engaging. I appreciate you, Vernon. Thank you, Vernon. I recommend all of you guys comment down below. Let me know what platform you guys are watching this. I do see some LinkedIn comments, some YouTube. Definitely go ahead and comment down below. Keep this stream engaged. Really appreciate all of you guys. But yeah, what do you guys think we are in? We see Black Monday bank crisis, dot-com bubble, and now possibly AI tech crisis. We'll see where things go. Now let's go ahead and quickly do some technical analysis on Bitcoin and see where things are going. Now let me go ahead and change this over to the daily. And right now, looking at the daily, we still are far away from really reaching some very good areas, which the area we want to first go ahead and reach, and the first focus point we want to go to is $91,000. Let me go ahead and clean up my chart a little bit because it does look a little bit messy. But these are some very key areas that we need to go ahead and focus on. But let me go ahead and change the colors a little bit. So this red line right here basically is where we want to see Bitcoin break above. As you see, this is where Bitcoin currently is at, $82,000. I think there's a possibility we could be seeing an inverse head and shoulders pattern, which is a very bullish pattern. Now we see a reversals pattern. So I'm still a little bit hopeful, but of course we need to go ahead and see that follow through first before we could go ahead and be assuming any kind of reversal patterns. But the question is, are we near a bottom, or is the bottom in? Well, we do not know. Unfortunately, I'm hoping the bottom is in now. Let's go ahead and take a closer look with Bitcoin. We definitely do not want to go ahead and see Bitcoin fall below the $60,000 range. I don't think that would be a good sign. That could be potentially signaling a possible bear market, which is not a good sign. So we'll take a look at that in the next coming weeks and days. Hopefully the FOMC meeting could go ahead and change the narrative. But yeah, I think in my opinion, if we do see Bitcoin come back down below that $60,000 range, I'm not saying it can't come back up, but keep in mind, guys, it took us a while to break through this resistance for Bitcoin. We were within this range for about almost 240 days, depending on where you're measuring. Back right here, back in 2024 of early March, before Bitcoin saw this breakout towards above over $70,000. So if we go ahead and see that resistance, which was once a resistance, now becomes support, and that support being lost, it is definitely not a good sign. So I definitely wouldn't want to see Bitcoin go any lower than like $69,000. I mean, anything lower than that, 65, could be possible. In my opinion, I just don't think it would be a good sign, guys. I think if we do see Bitcoin at $65,000, that could be a signal of a bear market. And that's definitely not what we want to see, right? So that is just my opinion. Like I said, things could change. Maybe we see a flash crash of $65,000. We see Bitcoin recover very quickly, like we've been usually seeing. But yeah, $65,000, in my opinion, is not something we want to see. I think that would signal a bear market, and yeah, that won't be too good. That won't be fun at all. So, fingers crossed that Bitcoin finds a support very, very soon. Worst case scenario, we could probably see Bitcoin fall back down to around that $71,000 to $69,000. As I mentioned, we could be probably entertaining that previous support that we saw from last before we saw the presidential election happen, and we could probably see a bounce from there, which a lot of people are calling for a super V-shaped recovery. But as you guys see, it seems like right now the stock market still has a little bit more bleeding for it to happen. And then for crypto, it looks like a possibility of a bottom could be coming very soon, but it's still indecisive. So the sooner we could go ahead and push to $91,000, uh, a little bit more breathing room we could now have, because now we could go ahead and assume that, you know, $77,000 was the bottom, and our new support is now $91,000, which, keep in mind, is a very strong area of resistance. So ideally, we want to go ahead and see Bitcoin climb back up to this $91,000 range as soon as possible, because it is definitely, we are some very risky territories, guys. So let's go ahead and read a few comments down below right here. E-Rich, how's it going, man? When you get a second, can you show us what a normal dollar trend looks like? Yeah, I'll go ahead and show you that shortly. Vernon says $69,000 is the big support, in my opinion. It's the high from previous bull markets. So there is a chance it could go down there, all the way down there. I agree 100%. Yep, you're 100% right. That is a previous all-time high from back in March of 2024, when we were around that $70,000 range, guys. So we could be seeing around that $69,000, $70,000 range. Like I said, we wouldn't want to see anything lower than that. 68, 67 is not something we want to see, but keep in mind we could go as low as $69,000. So that's pretty much where I want to see Bitcoin. Let's go back to the dollar. So for the dollar, usually what we want to go ahead and see, in my opinion, from what I've noticed, is we usually want to be at these $100 ranges. Usually around these times is when we see the dollar do very, very well as far as the market. Usually, as you guys might not know, but usually when the dollar is up right here at these high levels, that usually signals a very alarming time in the markets. And as you guys notice right here for the dollar did reach as high as 110 in early January. And for all of you that might not know, but December was actually the top of the market. So usually what I like to go ahead and see for as far as a dollar, I usually like to go ahead and see the dollar at around this $100 range. If you go back right here, you could go ahead and see that around 2023 of July was when the dollar was at around 100. I think I remember this year. I can't remember too well. We also saw this in January 2024. This was when we had the market do very, very well last year in 2024, before we saw the market go start going down. But this is ideally where a lot of the meme coins started to take off at around this time right here. Not saying that this is an indicator for meme coins, but usually when the dollar is down, it's usually a good signal for the crypto market. So that could be indicating that we could be a near bottom. Another thing too that I guess could bring us a little bit of hope is that we are seeing gold actually slightly get rejected as well. So usually when people are going into or leaving risk on assets, they're going to be going into more safer alternatives, which would be such as gold. And as you see right here, gold is entering this kind of resistance at around the $2,900 range. So we're going to see if gold could keep it up. But if gold starts to fall, that could be a sign that people are now moving from the safer alternative acids into risk on acids. So that is also a pretty good indicator right now that we could be viewing. But as you see right now, we do see that gold right now is struggling to break above that $2,900 range. So we'll see in the next coming days if gold will be able to break through this. If we do see gold break above $2,900 an ounce and we start approaching that $3,000 again or near it, that could go ahead and signal that people are not willing to be on risk on acids just yet. But if we start to see a decline in gold, there could be a possibility that we could be seeing a near shift onto risk on acids. In my opinion, I think it's time for gold to go ahead and finally start to, what is it called? Not pivot, not recover either, not de-risk, correct a little bit. I think it's time for gold to correct. As you see, gold has been going up since early December of, well, not early December 2024, since December of 2024. So before entering the new year, we did see gold go from $2,500 all the way to $2,900. So it's a nice little pump, guys. It's about 14% in gold. So I know silver also has been looking pretty decent, but also silver right now, as you guys see, is possibly entering a resistance. But overall, if you were to go ahead and zoom out on these assets such as silver, could be signaling that we could be seeing silver approaching that $50 to $60 an ounce, like we saw prior back in the early 80s, and then we saw this back in 2011 where silver hit about $49, and currently silver right now is at $32. And we are about a 52% move away from hitting that. So pretty interesting take to go ahead and see. As I said, I think in my opinion, there's still a lot of volatility left in this market. I think this is a normal correction for the stock market. Also for the stock market myself, I'm looking to go ahead and load up on some stocks such as Tesla are down over 50% already. Nvidia has corrected, I think, over like 30%, if I'm not mistaken. So there's a lot of things on sale, right? But I'm going to be waiting a few more weeks on some crypto assets and also the stock market before I make my decision. Like I said, we're only a few days away from hitting the FOMC meeting. So in my opinion, not financial advice, I would recommend you guys give it a few more days, see where things are going before you decide to make a decision. A lot of volatility in this market. I haven't really been too aggressive in this crypto market for the last couple months. I did buy a few meme coins, I would say probably last month, but I wasn't too aggressive. And that was probably like my first time since 3 or 4 months that I began to buy, because I was really worried about a possibility of a correction, and now we're seeing it, right? So these next coming months to weeks, depending on how long this lasts, like I said, it could last maybe for a few more weeks. Maybe the correction only lasts 3 more weeks. Maybe it lasts for 3 months. Who knows? But as you guys see, usually these market corrections that we see for Bitcoin, overall, we go back right here since February of 2024, we saw Bitcoin correct within this range for about 250 days. So almost about a year. So don't be surprised if we see that for Bitcoin. Currently right now for Bitcoin, we're already within this range for around 110 days. Bitcoin being between this $100,000 mark and now finally losing support, which is usually not a good sign. And this is the reason why there's a lot of market panic and a lot of discussions of a possible recession, which is not looking too good. So there's a lot more negative news than good news. Like I said, overall picture, I'm bullish in the market, but we have to go ahead and wait to see what the Fed decides to say. Hopefully, fingers crossed, the Fed says something positive in the next coming days for the FOMC meeting. For the meantime, guys, if you guys can, I would recommend enter some stable coin liquidity pools. That would be your best option, not financial advice. considering some USDT or USDC pools. Like I said, the one that I'm in right now that's been paying pretty well is USDT, earning 8% with very little risk to zero risk. And there's other pools that are earning you better returns. Now, keep in mind, these pools could fluctuate anywhere between 8. I've even seen it go as high as 30% for stable coins. So it just depends. There is a fluctuation even with liquidity pools when it comes to the rates they're getting. But like I said, it's way better than a bank, and at least you're still being exposed to the market, but still being in the sidelines. No penalty for pulling out your money. So that is the current strategy that I'm doing right now. Is I'm just stacking my USDT for the next coming weeks. I'll continue to add on to my harvest pool on USDT unless I look for a better pool on stable coins that I could go ahead and pivot, or unless I'm feeling a little bit more confident in the market, then I'll decide to get into something a little bit more riskier or a little bit more blue chips. But for the moment being, I'm stable coins. I'm way too exposed to meme coins. My portfolio is down over 80 to 90%, guys. So I definitely feel the pain. And right now, for me being that exposed, right now is the time for me to go ahead and take on the least exposure, due to the fact that I'm already super exposed in my portfolio. So for me right now, what I'm doing is I'm just staying stable coins to the side. So as I start to see the market go in my direction, then I'll start to get a little bit more aggressive on deploying capital on some blue chips. But I'm waiting to go ahead and see where things go, because we could see unfortunately, guys, another additional 30 to 40% correction. It could happen. And for that reason being, I would rather just stay stable coins right now for the moment, be patient. When the panic comes in, then start buying. But there's a lot of cryptos right now at some really good buying opportunities. As you see right now, Solana at 124. Like if it could fall below 100, that would be really nice. Another one that I've been keeping my eyes on is AVAX at $17. If we could get AVAX at around 12, even 10, that'll be a really good solid buy. So a lot of opportunities to buy right now on cryptos. But for the moment being, I'm waiting. I'm going to be a little bit more patient. And I'm going to wait for the market to give me the signals and signs before I decide to take on an aggressive position. Vernon says, are you going to try to leverage trade whatsoever, John? Could be a good to long Bitcoin at, if it hits like 69, 70K, it could be an ultimate bottom. Yeah, I definitely agree, man. It could be something I definitely will consider. The problem right now with leverage, man, and this is the reason why we've been seeing a lot of volatility all across the board, is that there has been a lot of greed and these fluctuations in the market, because a lot of people are leverage trading, and because we have a lot of our high hopes in the market, there's been a high levels of greed, which a little bit of volatility in the market shakes up the whole market due to leverage trading. So I haven't touched leverage trading since my last trade on XRP, which was back in January, I believe, was the last time I took a leverage trade. But yeah, man, it could be a possibility. I might go ahead and take a leverage long on Bitcoin. Like I said, Bitcoin is, I'm definitely looking at Ethereum and Solana. Those are the two ones that I'm really looking towards, because if Bitcoin goes up and Bitcoin has hit its bottom, there's a high probability that Solana and the rest of the altcoins could potentially be at their near bottom too. And as you guys all know, altcoins is really where the money is made. For Bitcoin, a lot of money is made over leverage trading for that too as well. But yeah, we'll see where things go, man. But definitely the market is, I'm not going to go ahead and lie to you. It is looking a little bit worrying. But like I said, for the moment being, stack your money to the side. Don't be in a rush to purchase just yet. Be patient. And just go ahead and stay on the sidelines for now. Yonder, he's alive. I'm alive. I am alive. So I'd highly recommend stay to the side right now. Wait for the market to do its thing. Even if you decide to do leverage trading options, trading meme coins, I'm sure there's a lot of new narratives right now for meme coins, but I think, in my opinion, guys, the best option could be stable coin liquidity pools, earning you this pretty solid yield for the moment. That is what I'm currently doing, and what I'm going to be doing for the next coming weeks, leading on to the FOMC meeting. And then once we get those news, I'll make my decision on what I'm going to be doing next. But definitely a lot of good altcoins that I also have in mind that I want to be sharing, that I'll share with you guys on Thursday. But with that being said, I hope all of you have a great rest of your day. I will be going live with a private community in, if it's not now, it's probably in a few minutes. But I think it's actually now. I will go ahead and catch you guys on my advanced session for all those who are in our private group. I'll go ahead and catch you guys there. Feel free to ask me any questions. But with that being said, guys, it was great seeing all of you here. Vernon, appreciate you as always. And I hope all of you have a great rest of your day. And I'll see you guys on Thursday. Keep in mind, a lot of volatility in the market. And as always, go ahead and smash the subscribe button to your number one DeFi, what is it called? DeFi protocol platform, decentralized masters. And with that being said, guys, I'll see you guys soon. Take care. Bye.